on building in public. And we're excited, Roger, that you came to join us today. You originally agreed to join Lunch Break, which was what we called the show before, and we've rebranded it to Building in Public now. And I think you're our first official Builder in Public scheduled.
Very cool. Yeah. Great to be on.
Welcome.
You can still eat your lunch if you want while you're here.
You're welcome to eat lunch. Yeah, that was our nice excuse, calling it lunch break, is we could still eat lunch, not feel like we're overstepping our our welcome with anybody watching.
I might. No lunch yet, but it should arrive soon.
Oh, nice. What are you having today?
I usually have some kind of salad for lunch. I try to have something lighter for lunch and then heavier for dinner. I think we had chicken tikka masala last night, and we're having Chinese food tonight. So that's just that's the usual pattern. Feel like I'm really looking forward to restaurants reopening, because I had certain places I like to go where I had different food, but with delivery, there's only a couple of places I really like 2 or 3, and I just kind of order from them over and over again. I'm sure I can do better, but that's...
So what's your go-to? You said chicken tikka masala. What's your go-to on Indian food for delivery?
Okay, my go-to is Lahore Karahi, which is in the tenderloin. I think it's kind of Pakistani Indian. I think it's like the best in the city, and I've been here 12 years.
Oh, wow. I've heard a lot of people mention that, but I don't think I've ever been. I think I am hearing a bit of an echo. Do you have any echo? Or I think Mishti mentioned a little echo. Are you getting echo on your side?
Yeah, I hear a bit.
I'm hearing Mishti echo. I'm not hearing myself echo.
Okay. And I've got headphones. Mishti, do you have headphones or no?
I don't have them in. I can try putting headphones in if that helps. I usually don't have them in, and it doesn't.
Okay. So Lahore, is that on DoorDash? You get that?
I don't. I believe so. Lahore. But yeah, it's. I don't know where we order it through. But yeah, it's one of those online services.
Right. And do you have a go-to for salads? Because I just started a new tradition yesterday on that front.
There's a mixed, which is pretty close to my house. I mean, we live in roughly the same part of town, so you probably know that one. I think it's the Fillmore mixed. So I tend to go with that. It just kind of depends on like my girlfriend will go walk over there sometimes and pick it up. So I think it depends on whether she wants to go do a pickup or we do an order. But if she does a pickup, we almost always get mixed, and it's nice. It's like fresher that way.
Oh, nice. I don't think I've ever been there. I did Jane yesterday. Have you had their salads?
I've had a few things from Jane. I really like it. There's one on Polk, right?
There may be the one that we went to is actually on Fillmore, not probably far from Mix. Yeah, it's right up from. It's kind of on the same block, where Ray's office is.
The which one? Where
Tonsing has his office?
No, I didn't even know he had an actual physical office.
It's a. I mean, I think to call it co-working space probably is not quite the right way to say it, but it's a space that a bunch of people use, but it's kind of fancy.
Oh, is that Avant space?
I think it's called Canopy.
Oh, okay. There's something I think called Avant Space that's like Greenwich and Fillmore, which I used to have an office on, but it's just fancy co-working. It's right above a restaurant.
Right. And you, so you used to have an office, and then I guess last time we hung out was probably way pre-COVID. I want to say probably it's been a couple of years or something, right?
I definitely saw you at the latest in early 2019. Because we were scoping out ideas. So we raised money for the search lab. I think we raised in January that year. I would say December is when I started the fundraise. And I think you and I were talking about that process because it was a little dicey for me to raise on just an idea. So we kind of talked about that and how that worked. But then I think I caught up with you again once we raised the round just to get your opinion on like 5 or 6 different ideas we were considering. You were part of a pretty small group that I tried to stay closely in touch with. It was maybe you and like 2 other people that I would like bounce ideas off of during that time. And then I think by April or May of 2019, we landed on the Made idea.
Mm-hmm. Oh, that's cool. So what was that process like? How did you think about like raising with a couple ideas in hand and then narrowing down to what you eventually ended up doing?
Yeah, it was a funny process. So I'll start with like the raising, and then I'll kind of get into how we got to the Made idea. I've never raised money on like just nothing, not even a prototype. In fact, when I started raising, we hadn't incorporated yet. And I realized that you kind of need like a company to put the money into. Like, so that was kind of a new concept. But yeah, we started raising. Like, I was just like, hey, I want to do something. And at first, I just told people like, I'm starting something new. I don't know what it is, and I didn't get like strong pull. I didn't feel good engagement on that. I expected that people would just kind of commit in the first meeting or like a day or 2 after. And it was just crickets. It was nothing. So then I went out with like, just this like laundry list of what did I do? I went out with like a laundry list of ideas. And what I would do is I'd say, here are my top like 3 ideas. And I would just pitch them. And what I found there was like I pitched Hunter Walk at whatever his fund is. Homebrew, yeah. I pitched Hunter, and like he was like, I love that guy. He's so funny on Twitter. He's like one of the number 1 people I wanted to work with, and he passed because he didn't like one of my ideas that I said was like the main one. We were thinking of doing like an Uber Black competitor. And he's like, yeah, that just seems like, building a product for rich people. Like, I don't know, that you're going to get bad press and like, blah, blah, so he didn't like that idea. So he passed. So then right after that meeting, as I was walking back to my car, I could tell he was going to pass. And I had another meeting after that. And I was like, okay, I need to pitch this differently. So I sat in my car and I took my top 10 ideas and I organized them into 3 themes. And I just pitched those themes. And I kind of described the themes. I was like, look, I'm not going to commit on the idea we're doing. I'm not saying which theme, but like we have, but if you like, I can drill in on the top 2 ideas in each theme and how I got to each theme. I did that. And then like, that was day 2 or 3 of the fundraise. And after that, like it was smoother sailing.
So the theme stuff was like a big change in what really got people to engage.
Yeah, just talking about themes and not getting too specific on ideas. Because I think when I was too broad, like I don't know what I'm doing, or too specific, that triggered like different concerns for people. But when I was in the middle, that I think that was kind of the sweet spot.
Right. Yeah. And you sort of had some kind of flexibility around, like you had kind of a unique position from your personal brand and kind of stuff you had done before leading up to this. So I wonder, are there people who are kind of in a similar situation that you're in, or kind of you were in, that, have sort of had similar experiences where like the theme stuff works, maybe the single startup is not the full requirement, but a bunch of themes to explore kind of works better than kind of the general search lab idea?
There's nobody I talked to who had done something that was kind of exactly the same. And that's why actually I did a blog post on Search Labs, which you can check out if you look at my Medium and look for that. But, I talked to a lot of people who'd done things that were in and around that idea, but nobody had done exactly that. It's kind of like Search Lab is kind of a one-off, kind of like what Atomic does, the kind of idea incubator, what do you call that? It's kind of a one-off version of that. You just pick one idea and go after it once you find it. But once I did the Search Lab, people came out of the woodwork, once I did, the Medium post, people came out of the woodwork and were like, oh my God, like I've been thinking about this, but haven't really articulated it this way. This is exactly what I want to do. Like, can you give me advice on how you raise money? So I had like just nonstop calls for weeks and months on people just emailing me and asking, calling and asking like kind of how it worked. So I'm glad I published the blog post, because hopefully entrepreneurs can point to that and tell VCs, like, this is what I'm doing.
Mm-hmm. Yeah. It seems a lot more honest too. Like, what is the plausibility that you would actually land on this golden idea from day one that you can perfectly pitch to people, especially in consumer facing startups?
I completely agree. Yeah, consumer is so tough, and I feel like I've pivoted every time I've done a consumer startup. And you look at, in my blog post, there's examples of 10 or 15 companies that were pivots. Slack was a pivot, right? Zynga was a pivot. There's a lot of great consumer companies that were pivots. So why not set that intention from day one?
Yeah. It's kind of interesting because we've been talking to some people from the South Park Commons fellowship program, where they're kind of betting on people and giving them the flexibility to come up with an idea, and a little bit more free reign kind of incubation than seems normal in these kind of fellowship things. But I'm curious, from a founder's perspective, what would have helped you from your investors when you were in this ideation iteration phase, figuring out which idea to pursue, or kind of what outside help would have been the most useful?
I would say three things. One is we needed to hire great engineers, product people, and designers. So day one, I set out, as soon as we closed the financing, I set out to just bring in an incredible team of early kind of consumer people. I was inspired by, stories like how thoughtful the Instagram founders were. I heard that every offer they made, they would write a 5 or 10 page letter to that person on why they wanted them to be a part of the Instagram family. They'd go for a long walk with each person, and it was a super high touch, very personal experience. They grew the team very slowly and thoughtfully. So I took that approach in building the search lab, and just wanted to bring in the best consumer talent I could find. Definitely full stack people, somebody who could build a whole app in a week. Really amazing people like that, so that we could take that DNA and we'd be able to, number one, test more things, but number two, test them very, very, very well. So that was kind of first and foremost is talent. Number two, I would say, is just ideas. A lot of VCs kind of have what I call an idea shelf, where they've just been hearing cool ideas in coffee meetings, or they got pitched by this startup that was a great idea, but a bad founder, and then they kind of just put those ideas on the shelf, and they're like, man, I hope somebody does those someday. So I did a ton of meetings with people where I was kind of just interrogating, what's on your idea shelf? If you could start a company right now, what would it be? And, even founders who are doing companies, they'll get ideas, and they're like, man, I'm CEO on this, but what if I did this other thing, So I just met with everybody smart who I thought would have good ideas. And number three is benchmarking, and benchmarking with domain experts. So, you might launch a product like Highlighter, and then it's okay, we want to grow Highlighter. So how do we grow Highlighter super fast? Well, what's another consumer social company that's growing super fast? Okay, well, can I get intros to the early growth people at Facebook, Twitter, DoorDash, Instagram, whatever? I find that those conversations level you up and level up your thinking so much. So that I would say is the third thing I looked for from investors.
And were there people who had things on the idea shelf that you kind of toyed with or considered as part of it, or did that end up becoming a fruitful process towards some end, or did that end up sort of just dissipating as you were sort of finding your way?
I really liked some of the ideas that I got from other people. I think the idea we went with was one of mine. Actually, for my last business, the idea we went with wasn't mine. It was my co-founders. And same with the business before that. So it's kind of weird, that the idea was mine this time. I fully was open to it being anybody's. I think it's good to be open-minded. Great ideas can come from anywhere. but yeah, I heard some really cool ideas. Like this one person I was talking to said, it was actually the customer for one of our prototypes. I was chatting with this guy, and he said, man, I've always wanted to build a SaaS product for HOAs, because HOAs have, I think, $200 billion sitting in their bank accounts. It's some insane amount of money that HOAs have. And it's like really poorly managed, and it's really ad hoc and like totally messy. People are putting hundreds of dollars per month out of their paycheck into these things. Right. It's totally underexplored tech. So I really strongly consider that one. I like that idea.
Yeah.
I'm sure there's others I'm forgetting now.
Yeah, that seems promising. And I think this pattern, I think there's examples where the idea shelf has worked really well. Some ones that come to mind, I don't know how much the story's been told, but the Carta story was a little bit of an idea shelf story because Manu Kumar was investing a lot and had all these cap tables that were a mess. So that was a little bit of an idea shelf kind of thing that now is brought to life through Henry Ward as the founding CEO. And then I think certainly Opendoor has some flavors of idea shelf because Eric was working on a real estate company before doing a different thing. And I think, Keith was excited about the, I think it was called Home Run at the time, but the Home Run concept, and was discussing if Eric wanted to turn that other company into Home Run. And then that didn't happen. But then when it was time to start Opendoor, they'd already sort of had that idea shelf had been explored for, I think, years at that point. So there's a bunch of, I think, there's a few positive examples where these things actually, these patterns do work.
Yeah, I love the Opendoor story. I'll share the version I heard. I'm sure there's different versions out there, but I heard that early days, I think at like Clarion Capital or something, like Keith was like an associate, and he comes into he comes into Peter Thiel's office and he's like, hey, I have this really cool idea, which is basically like the idea for Zillow. And Peter Thiel's like, come on, like if you can build a product that knows all of the home prices, you've got to be able to do something better with that. Get out of my office, So Keith goes back to his desk, tail between his legs. He's like, oh man, like, I wish, I need to think more about this. And then he took a month and thought more about it and came back to Peter. And he's like, oh, I get it. If we know all the home prices, we should just buy the houses that are undervalued. Peter's like, yeah, that's what you do. And then, it sat on Keith's idea shelf for like 9 years, and he was looking for the right founder to build it. And then he met Eric.
Right. Yeah, it is interesting. And I think there's a nice pattern in that distinction you're making between kind of the Zillow kind of data consumer and leads approach versus the actual owning the thing, which is the more full stack you, like if you have a unique piece of data, knowledge, service you can provide, the more full stack you get about delivering that experience, the more that you can control for the quality, and you can capture more of the economics. You can just sort of like build the thing you want. I think they've been, I think, somewhat famous. I think maybe Keith had mentioned before at one point about how when you build that full stack stuff, you actually get to control the whole experience in a way that you don't when you kind of end up, if you have something truly unique and proprietary, why are you selling it to somebody? Selling it is such a hassle. Just do it. So it's an interesting pattern.
Yeah, exactly. I think his pinned tweet is something about vertically integrating, how that's a good idea. Keith is one of the first people we talked to when we had this idea, the idea for Made, because we're like, hey, we're doing vertically integrated home renovation. And I think he had like some competitive investment, unfortunately. I don't know, but we couldn't make it work with Keith, unfortunately. But it is the kind of thing that I think is like, would be right up his alley.
Mm-hmm. And so let's talk about how this idea you said kind of came through kind of from your head. Was it a personal experience you had, or kind of a market analysis, or how did this come to be?
So the real story is we were doing a very what's the right way to say it? We were going through kind of a very top-down idea finding exercise, just very like iterative exercise. I think we would meet twice a week. So everybody in the company was like working on prototypes at any given time. Like everybody had some prototype they were assigned to. But then I think on Tuesdays and Thursdays, we do brainstorming sessions, maybe Tuesdays and Fridays. And every week.
And how many people or projects are we talking about, just to make sure we can anchor our visual here?
So there were 6 people at the company, and I had it divided into 2 project teams. So 3 people per team. So we had the capacity at any given time to like work on 2 ideas. And then as soon as a team freed up, they would take the best idea kind of off the top of the idea pile, and that would be their next idea that they built. So there's kind of this like pipeline approach to, idea finding. There, I think we had a 5-stage pipeline, that spanned from idea finding to prototyping to, launch to kind of measuring and assessing the result. So while that whole pipeline was happening and everybody was running that, in parallel, we'd of course do idea finding for new ideas. And we'd involve everyone, and there'd be a new prompt every week. And we had this one prompt where we had this one week where we're like, okay, just write down like your favorite companies. So we made a list, and I kind of curated it of our favorite companies that were consumer. That was the one requirement. It just has to be consumer. And then the next week we had this exercise. It's like, what if 2 companies had a baby? Like, what would that be? So we kind of tried to boil each company down to the essence of why we liked it. So I invested in Lambda School. And what I like about Lambda School is they assume risk. So I call that category like risk assumption. And we have that as one of our areas. So they'll teach you computer science for free, and then they'll take a share of your future income gains. So I was like, man, that's so cool. And I also really liked Open Door. I liked just the bigness and boldness of it, and how they were taking our number one asset and, building a valuable business around that and making it easier to sell. So one of mine was like, what if, and we actually made this like, we coded up this system that would randomly pair different ideas together. And I think one of the random pairings, or maybe I just came up with it, was Open Door and Lambda School. And I was like, man, like, what's another Lambda School? What's another asset where you can assume risk and take a share of future gains? And I realized it's actually houses. Because if you do like a free home renovation for somebody and then their house becomes more valuable, you can take a share of the future returns. And then the more I thought about it, the more I liked it, because 90% of homes in the US, 90 million homes, are owned by the inhabitant. They're not owned by an investor. So I thought, man, there's so many assets that investors can't get access to. There's 90 million homes that are sitting there that are this asset class that like no hedge fund and no investor has access to. So, if we could get fractional equity in like a bunch of homes in the US, that could be a very interesting asset class. And also, construction is such a limited resource, and it's in such limited supply that to me, it was like kind of a marketplace with limited supply, which is what, Bill Gurley and the benchmark guys always say is a good marketplace to go after. And my previous business, Gigster, was a marketplace where supply was unlimited because it was developers. And we struggled so hard to sell it. So it just, to me, looked like it was kind of like Gigster, but better. It was familiar to me, and it kind of touched on this cool asset class. And it was these companies I liked that were having a baby in that case. So
let me make sure I understand, because I don't think I understood this about made renovation. I may have had a different model in mind for how it works. So are you doing a renovation of, say, a bathroom, and then you're owning some of the future equity upside in that kind of the real estate asset?
No, currently not. But that was the original idea.
Oh, I see. Okay.
We were like, okay, well, taking equity is just another form of payment, but we need to be able to actually do a home renovation. So let's just build a business that does home renovations. We'll sell them for cash because people are used to paying cash. They're not used to paying home equity for renovation. And then after we get that operations machine up and running, we can change the model. So we can just have another button next to the cash button that says pay with equity, and we'll see how that works. Or we can do a marketing test and see if it works. And we haven't done that yet, but we may.
Is that I mean, it seems to me like there's a lot of opportunity if you've got the general thing working to just like scale that thing out even before you get into the more tricky, financing, customer value prop that would come with kind of the equity ownership stuff. So are you sort of in core scale mode with that core proposition, or do you want to sort of get a deeper suite around the stuff you're currently doing?
We currently have some. I mean, it's all very linked. Unfortunately, as much as I'm an engineer by background. As much as I like to like modularize it and say like we've got the delivery machine and we've got the demand generation engine, it is pretty linked. Like I'll give you a really interesting example. So one of our challenges with demand is pricing. Like our price is a little bit higher than what you'd see in the market. We need to take a margin for the service we offer. So that puts a damper on demand, and our conversion rates aren't as high as I'd like them to be on sales. One of the biggest ways to lower our price is if we have a lower construction cost. So if we can get a better deal from our general contractors. But in order to get a better deal from our general contractors, currently they're charging us more money because we have delays in our projects, because we're not ordering materials in time, and sometimes they're late. So they have to have their crews like waiting for the materials to show up. So there's this operational challenge, which drives an increase in our construction price, which drives an increase in our cost to the customer, which drives a decrease in our conversion rates on demand. So it's all very linked. And right now we're kind of attacking it from both angles.
And so I'm not super familiar with the construction process, but you work with something like a GC who's responsible for the construction, but then you separately have to source all the materials, or is the GC sometimes responsible for that?
We always source the materials.
And why is that? Just the way the industry works, or is that a choice that you made kind of for a platform perspective?
That's typically how the industry works. So there's usually a split on materials. You have so-called like rough-in materials, which is stuff that's behind the wall, like pipes that go behind the wall, or like lumber or drywall, stuff like that. That's rough-in material that essentially the customer can't see. All of the kind of visual materials, or the finished materials, typically contractors will make the customer buy those. So customer might go to like Home Depot and then hire some design consultant, and that design consultant will scope out a bunch of Home Depot materials. Or they'll go to like their local design center wherever they live, or they'll just go online and they'll literally buy all the materials themselves. But for a bathroom, there's 42 different finished materials you need. So it's a tall order. I wouldn't want to do that myself. Yeah, I don't know if that answers the question, but typically customers buy them. But in our case, we need to capture a little margin there. So we'll buy the materials.
I see. So you're sort of functioning like I mean, do you have like a wholesale relationship with a lot of these material providers, and then you kind of sell them at retail, and you're sort of, when you talk about like a little bit of margin, that's what you mean?
Absolutely. Same thing happens with construction. We buy it at wholesale rates because we're buying $1 million a year of construction from each contractor. If you renovate your bathroom, you're buying $20,000 of construction from them. So we're 50 times more interesting as a customer than our end customers will ever be. So we can also get construction at wholesale rates. Although, again, I think we're not getting as good rates as we could get. And so on top of those two margins, we also charge like a design fee and service fee. So that fee plus the construction margin plus the material margin equals our gross profit.
All right. And does the construction process, I guess, because you're providing $1 million of construction value to that GC, you have presumably more of their ear to get things sort of done right or redone or something. Do you find some sort of like top grading ability that you might have from being able to work with people and figure out, okay, this team is really good, do more with them. This team is really, kind of shoddy, so kind of remove them from the process. Is that something is that pretty active, or that just sort of happens haphazardly from time to time?
No, that definitely happens. I mean, they don't want to bite the hand that feeds. When they start working with us, it's just a better relationship. It's better quality of life. most of these general contractors are, these are lifestyle businesses. The average gross revenue for a residential remodeler in the US is $600,000. So it's like a restaurant or something. They're not trying to build billion-dollar companies. It's not Silicon Valley. They just want to get by and take home low six figures to feed their family. So if they can work with us and get free jobs, we don't charge for the leads. They get free leads that are totally scoped, ready to go, blueprints, materials purchased, customer totally knows what they want. There's also like a third party who's helping like deal with the customer if the customer is being a hassle. All they do is just build a bathroom and get paid. That's what they want. They don't want the customer service layer and the sales layer, and the hassle of a customer is changing their mind and somebody who's micromanaging them. So yeah, they like us. They give us their best crews. They try to grow and do more business with us over time. Some of them will hire like new foremen and new crews just to like, build like a maid renovation unit that only does our projects. Some of them convert their whole business over to us and they become like essentially a subsidiary. And yeah, some of them just use us to fill gaps between larger projects, and any of that's fine with me. We tend to start with the gap fillers and then we try to grow them, essentially get, negative revenue churn on those relationships.
Right. I mean, it seems to me like you sort of solved the problem that maybe 10 years ago would have been solved with like a bunch of, I have to go to Yelp and try to search reviews or get referrals and I need to do the quality sorting myself as like an individual consumer. And if I can just go to a trusted brand that already has larger scale platform relationships, presumably those larger dollars and larger kind of, iterated games that you play over the course of years with people mean that you actually can up level, like the good actors can be given credit for being good actors and they can build good processes around the brand. So it seems like a really, really compelling kind of feature of this kind of business.
Yes, I would agree with that. There's a lot of opportunity to be more efficient and, since we're doing it at scale and we are the bathroom experts, there's a lot of opportunity to just, to do a great job and over time automate more of it and potentially get more margin. And then it's kind of an everybody wins situation. It's like our customers get to work with the absolute like number one bathroom experts. Like we might do more bathrooms now than like anyone else in California. We might be number one because all these players are so small. So yeah, a lot of advantage all around.
And is the business, is it focused on California today, or is there something kind of because of your contractor relationships, materials relationships, retail relationships that cause it to be kind of geographically focused for now?
It's not about the relationships. It's about, it's just, it's just the same thing as like DoorDash or Instacart or Uber. When you want to scale geographically, you need to build supply in that market. You need to build demand in that market, right? So we're going market by market naturally. The only other thing that's like, I would say unique with us is like licensing. Sometimes there's a state licensing requirement or even like a county level licensing requirement. Like I think Chicago, Cook County has its own license. And I think, I think like Manhattan or like New York City might have its own. So we're going and kind of figuring that licensing stuff out in advance. But once that's nailed down, it's just, city by city.
I have a process question too. I'm curious about how you had this kind of process when you guys were thinking of what idea to pursue and like different teams coming together in the brainstorming sessions. How do you approach now like decisions that have to be made and any pivots or new ideas that are coming up within this idea that you've decided upon? Like what are there parts of that process that you found useful to continue as the team sort of solidifies around one thing to execute as well?
It's a great question. I mean, I think a lot of people feel like a startup is one idea, but a startup is 1,000 ideas.
Yeah.
So yeah, I mean, this is actually an area where I would say we struggle a little bit because we're so execution oriented, and it's ironic because we were like the idea people,
Yeah.
but I think we've got a lot of great ideas, but there's this like execution challenge, and the way we kind of what we identified maybe 4 or 5 months ago when I first noticed this problem, and I noticed that when like the way that you notice a problem like that is your roadmap is like starts growing like really quickly, and like essentially like you're not able to consume ideas as quickly as you're generating ideas. That's when you have obviously an execution issue. At least I mean execution within the innovation group. So what we've opened up a few recs for product managers, because I really see, I think of a company as like a multi-core processor, or at least your innovation machine is a multi-core processor. When you add product managers, you're adding cores to that processor, which means you can do more innovation in parallel. And I think sometimes executives can be cores and sometimes co-founders can be cores, but not always. So you see, I think like I'm not a great core because I'm the CEO and I have to like run the company. I can't sit there and like run an initiative. My co-founder might have one core because he's managing a couple teams. And most of our executives, I would say, have 0 cores because they're just like super busy running what they're doing, which is fine. So I think adding product managers gives us more cores, and there's at least 3 or 4 things that I want to be doing right now, and we're only able to do like 1 or 2 of them. So I think, roundabout answer your question, but I think that there's kind of an innovation motion, which I think we're good at because we're the thoughtful people who tend to have ideas and we're very observant. And we also are thinking from first principles about modeling, like we're kind of throwing out most of the conventional wisdom. So there's that. But then you've also got the ability to actually execute on that. And it's really demoralizing to brainstorm when like none of the ideas ever get built. So like that follow through motion. And that's, I would say, what we're perfecting now. And we're going to have 2 product managers start this month, our first 2. We had one start yesterday and one starting in about 2 weeks. So I'm very excited about that.
Yeah, that's interesting. It's interesting. I like what you said about how a startup is many ideas at once. And it's kind of interesting to think about like what things should a company be thinking about that wants to prioritize that mentality, like from day 0 to day 100 to when you're like a Google-sized company with different like innovation teams. But a lot of people often talk about how at a certain size, incumbents just get too bloated and they miss out on. I feel like they have maybe a lot of cores and a lot of like energy at that point, but do you think that's a little bit more about like ethos or culture, or what kind of goes missing at that point?
You're saying, why do big companies sometimes slow down on the innovation front?
Yeah.
I was pretty close to this with Gigster, my last business, because a lot of the customers that we closed, to do software consulting, like the angle we took is we have like Silicon Valley engineers and like we can help you like be more innovative. So I would fly out, sit down with executives at Fortune 500 companies and talk to them about innovation. And there's a lot of reasons for this. This is well studied. I'm not necessarily like the world expert on this, but what I learned and observed in a short time was there's often a lot of people for whom it's in their best interest not to innovate, because their team will be disrupted or their headcount will be, if you make them more efficient, that means they have less headcount and they're like less important at the company. So there's just a lot of like self-serving motivations that can stifle innovation. I think, there's also, once you get big enough, there's the notion that like, why innovate? Just let the ecosystem innovate and then buy people that work. Like if you're Facebook, why do you have an innovation motion at all? Just like buy, like when Highlighter works, just buy it for $1 billion. Cause like you wipe your butt with $1 billion. It's like nothing for Facebook. Right. I think there's a couple reasons. I think also change management gets way, way harder, like rolling out changes. Like we are at 60 or 70 full-time employees. And change management is exponentially harder than it was when we were at 6 or 7, right? It's like when we were at 5, 10 employees or whatnot, like I would just tell everybody at a meeting, hey, we're doing it this way now, and like it's done. Now there's like levels of management, and there's people who are like, whoa, slow down, like this is going to break such and such part of the motion. So it just gets way more complicated and uncomfortable for people.
You mentioned that the team size is 60 to 70 people these days. Is that right?
And full-time employees. We've got a number of contract employees as well, and I'm also not counting our build partners.
Sure, but even that's a sizable number compared to what I think last sat down. So I wonder, were most of them added during the COVID era, like in the last year or so? How has that felt?
Yeah, I mean, we hired 30 people last quarter.
Last quarter, wow.
Yeah, so I think it's been growing steadily. We raised an unannounced round of financing in Q4, so that helped contribute as well. We also, our sales team was way ahead of our delivery team. So we were struggling on customer projects. CSAT was dropping off a cliff. Delivery time was going up. Like all the metrics were going in the wrong direction for our ops team. So a lot of those hires came in through ops. Some of those hires are coming in through innovation. Some of it's, leadership that was missing, where you had people that were running like 4 teams at once. So it's kind of like a lagging indicator of a lot of the growth that we saw last year and the trajectory that we're on now.
And I'm curious to hear about the growth, because when I think about the idea of home renovation and COVID, it feels like that would be a tough, needle to thread, but it sounds like things are working well. So can you take us through a little bit of like how the COVID era impacted, what were the concerns and sort of how did you pull up to the kind of growth that you're seeing now?
So it's the opposite. COVID really just caused a boom for home renovation. I think, it's the era that people kind of like took stock of all the projects they've been meaning to do around the house and just started ticking them off the list. I think, a ton of people were just like, I'm not going to work. I can be at home and I can manage this project and oversee it and make sure it gets done right. So a ton of renovation activity happened. Every CEO I know who's in the space saw a huge bump. There was in March and April, obviously there's a dip because people, the news sensationalized COVID to a obscene degree, and we were all terrorized, that's the job. That's what the news does. But they just terrorized all of us. And, but I think once people kind of got back to their senses and realized that they're probably going to be just fine, you saw the activity really start to boom. So
it was like a couple months of fear maybe, and then it really started to boom. So what, like March, April, fear, and then boom starting May?
Yeah, like May, June, it started to boom a lot. The other detail is because of COVID, we had to change our sales model entirely. We used to do in-person sales. We literally our salespeople were Ubering around the Bay Area with like a tablet and like showing a presentation to the homeowner, and like it was very in-person oriented.
And you had this retail shop, right? Which I think just finished. The retail shop on Chestnut.
We launched that.
I think it had just
very auspicious timing.
Right. I remember walking by it right as they were putting the final touches on it, and then I think COVID was like the next week or something. I don't know the specific timing. Yeah,
that was unfortunate, but yeah, with our sales model, we had to convert it to virtual because we couldn't have people driving around to customers' homes. So that actually accelerated things as well. That made our sales cycle shorter.
And so is the idea that kind of in a post-COVID world, everybody comes back to offices and you guys are going to convene in an office, some skyscraper in San Francisco, or are you guys fully distributed forever, or some kind of mix? How do you think about what does the team kind of look like, or how do you plan for that when hiring so many people?
That's a good question. I'm sure some of the employees at Made are curious and would love for me to weigh in on this.
Is it an active topic of discussion that people are actively?
What?
Is it an active topic for discussion that people are wondering?
So I haven't heard it yet, but friends of mine who work at companies, like FANG companies and stuff, they all are very curious, like when they're going back to work and how that's going to happen. So I just imagine that employees at Made might also be curious. I haven't thought too much about it. I think we'll probably move to a model where people can come into the office if they want. And, we'll have certain days a week that people are there. I think we probably would be one of those companies that offers lower salaries for people working in other locations. So we're trying actually to set up a satellite office in another state or city that's, where we're paying people cost of living there. So for us, I think it will depend on where people live, what we pay, but I don't know that we'll come back to the office soon. I need to think about that.
Mm-hmm. And so when you're recruiting, you don't have a Bay Area requirement for people who are joining the company today?
No, we don't.
What about you personally? Are you still, I know a lot of our cohort of friends have gone into different places. I'm still here and think probably will be Bay Area for a while, but I wonder, have you sort of given it thought? Do you feel like you're doubling down or open to the questions, or where's your head on that stuff?
I've been thinking a lot about this. I think there's two or three factors. One is that I've always wanted to live in New York, and I want to do that before I have kids. So I was thinking of maybe just going there for like a year or two, which I'd want to do soon. So we're thinking of getting an apartment in New York actually this summer, and then we'll just kind of be bi-coastal for a little while. Other factor is just the government in California and the Bay Area. It's kind of insane, like how like you have this really progressive government to the point of being like really illogical about certain things, and they hate rich people, yet they want that tax base. So I think if you're like a financially successful founder, it's really odd place it's an odd place to be. Like one day I got to work in Soma, and I was just walking to the office and I happened to glance at a telephone pole or something, and it had a sticker on it with a guillotine, that said something about tech people. So that's like the attitude we've got here. And there's like feces everywhere and like the city's poorly run. So I think that's definitely a factor. I think we could do a lot better. So I am looking at other places that kind of have different governments that have different philosophies. I also am from Texas originally, and I've got family there. So I've been considering Austin. Right.
Yeah, Austin seems like one of the revitalized hotspots. I mean, it's always been kind of a hotspot to be, but it kind of gets a lot of new attention from Bay Area expats these days, it seems.
Yeah.
Have you visited Miami?
I haven't. I feel like Miami would be awesome if I was like single and like unemployed. I'm neither.
That's amazing.
That's good.
Actually, this is slightly off topic, but I do want to ask about how you kill ideas. I'm so intrigued by the whole like idea thought lab process, and wonder if you have any examples of like ideas that were the hardest to kill, or like talk about when you've been at that stage of tension where you're like, I'm not really sure, could have tipped either way, either when you were deciding on what company idea to go for, or something that's going on now within like the innovation group within Made.
Yeah, I'll talk about an idea that I still pine after.
Yeah.
So I really liked our Uber Black competitor idea. And David's nodding. I talked to David about it. I don't think David liked it. Nobody liked it except me, And I think one of the big factors for me is can you hire really smart people and get them to work on the idea? So I actually started trying to hire people for that idea as kind of a test, but also like if it worked, I would have pulled the trigger and brought them in and probably done it. And I talked to this really, really strong product leader, and I talked to a really strong operations leader. Like this guy was COO at Zynga, and I've always wanted to hire him, and I hope I will get to work with him someday. So I called him and I was like, oh my God, I really want to work with you on this. This is going to be huge. Here's why. And he's like, man, I don't want to do that. Like, and he gave me some like concerns he had with the business model. And the product person I talked to just like didn't really like it, And I got a few other data points from people I talked to who just didn't like it. Nobody liked it but me. And some of the arguments were kind of good. Like the operations guy was like, look, if you're building this product for really fancy rich people, like customer service is going to be a pain. Like they're all going to be super particular about the cars. There was another detail that I wanted to own all the cars. I wanted to own leases for all the vehicles in the fleet, and like getting the supply and demand balance to work is hard with that. Like Uber doesn't own any of their cars. Airbnb doesn't own any of their like apartments. So that was
the original Garrett Camp idea, right? Was he
what?
The original Garrett Camp version of Uber was, I think, owning a bunch of Mercedes, right?
I don't know, but that was my idea. Was I was just going to lease a bunch of Mercedes S-Class because I got to ride in one a couple times, and it's just like a dramatically better experience to have an actual private driver chauffeur take you around. Like I would pay $100 a ride for it versus $15 a ride for Uber. And I know a lot of people who pay $100 a ride, like thousands of people in San Francisco would use it full time. Cause a lot of people, they're expensing the ride anyways. So I just thought I still think it's a good idea. I just think
weren't we tweeting about a company that I thought we were trading tweets maybe a month or two ago about a company that was kind of doing this?
Maybe, I don't remember.
I thought I saw somebody doing this, and I thought I looped you in and said, this is like the thing that you wanted to do many years ago.
Can you send me that? Because
I'll see if I can dig it up.
But there's a company in Dallas. They're Dallas based, I think, and they have like Acura SUVs. That's their whole fleet. Mm-hmm. I don't know if that's the one you're talking about.
Yeah, I just remember the concept when I saw it. It reminded me of our discussion about this, many years ago, but I don't recall the specific model of how they're delivering the service.
I think this would be a great cash flow business. Like if anybody's listening and wants to start this, let me know. Like I'll be an advisor or something. But I think this is like a guaranteed, $100 million business.
Yeah. When Travis was first working on Uber, he thought it was more of a cash flow lifestyle business at first.
Well, I mean, chauffeur services are, it's not a huge market. It's like $6 billion for chauffeurs, for like chauffeured cars. But you could take a lot of the market. I mean, celebrities, rich people, politicians and whatever, like these people, if there was some service they could use that was like exclusive, invite only, like more expensive, like of course they would use it. Cause I think there's this gap. We were looking at ideas for like rich people, because our theory, I mean, the rich are getting richer, and there's like so many rich people that one of our themes that we raised money on for Untitled Labs, the search lab, was like products for the top 1%. Because there's just a lot of money there, and like, why not go after it? Why not build a consumer product that can go after that niche, which is like, that niche owns like 80% of the assets in the US. So this, Uber is a crap experience. Even Uber Black is a crap experience. Or you can hire your own driver and pay them like 50 or 60K a year and lease a car. Those are your two options. There's nothing in between. There's plenty of people who are, maybe they're millionaires or decamillionaires or even centimillionaires, and they don't want to like hire their own private driver because that's just kind of gauche, and like you don't need somebody full time. So there's a huge gap there still, I think.
Mm-hmm. Well, I think sometimes the best way, if you believe in a gap, I think some of the best thing you can do is, tweet about it, write a blog post. And, I've found in the past, sometimes like a simple tweet storm, and, people come out of the woodwork saying, oh, I'm working on this, or, oh, I just met this company. So if you want to see this kind of innovation come to the world, but you are busy, making bathrooms and kitchens better, you can still be a part of it.
Well, I was thinking of getting a couple friends. I mean, I'm like, if I like the idea, why not prototype it? I was thinking of getting a couple friends together. I was thinking of just leasing a car. It's $1,000 a month to lease an S-Class, and then there's insurance and detailing and secure parking. You add all that up, it's about $1,500 a month for the car and all that extra stuff. Then a driver is maybe $4,000 to $6,000 a month. Call it $5K a month with benefits. So you're looking at like $6K a month. So if like me and you and a couple other friends got together and just said, hey, we're gonna pay, call it $600 a month each for 10 people, we could just timeshare a car, and see if we use it, see if we like it. And if not, then just can't, get out of the lease. So I've been thinking about doing that, but and I could code the app for it so that we could easily timeshare it, but I don't know. I just haven't gotten around to it.
Yeah, I wonder if that kind of thing exists. I wonder how people would, think about that kind of service for food as well, because presumably it could work for food, but the type of car is a little less important in that case. So I think if I
had the idea to do a timeshare personal chef.
Yeah, I still like that. Was that one of the ones you were exploring, or how do we get talking about that? Was I just pitching you on what I wanted?
I think I asked you, what do you want me to build? If I were to make something.
Yeah. We've wanted this for a while, which is like, I think to have a full-time person cooking is pretty over the top, but there's a lot of people in our neighborhood who would probably want, freshly prepared meals and don't always want to get kind of, restaurant type food. So this has been something we've been excited about for a long time. We kind of prototyped through kind of food co-op instead of through kind of a private chef style. But I'm still enthusiastic that there's something there.
I love the private chef experience. We've had somebody over a couple times during COVID. We've tried to do executive offsites. Like, we're going to have all of our leadership team, which is about 7 people, in town next week. Mm-hmm. They're all flying in from all over. I mean, we have a few in SF, which is good. And we're trying to book a table at a restaurant for 7 people to eat. You can't do it. 6 is the limit. That's the magic number. So I'm going to have to clean up my living room, and we're probably going to hire a private chef, and my house gets to be a restaurant again for the 4th quarter in a row.
Right. Fun. Well, it'll be very personal, intimate experience.
Yeah. No, I like it. I just, I think I feel like I've been forced to take that option because restaurants are closed a couple times.
Right. Cool. Well, I know we're coming to the end of the hour where we were going to spend together, but we often like to kind of close on kind of an open-ended topic, and that is, when you look around, you're sort of focused on renovation and made renovation and your own kind of project and entrepreneurship. But when you look around the world, there's probably a bunch of things that sort of pique your curiosity, or that you're sort of intrigued by, or little things that maybe you have a hunch about. So, we like to end with this question, what are you curious about these days? What do you have kind of questions about?
First thing that comes to mind, and I haven't been as curious recently as because I'm just so focused on made, but first thing that comes to mind is it's just the state of, I would say it's personal finance and the equity markets. Both of those things I think are interesting, and they're obviously linked. I have friends reach out all the time, friends of mine from college or high school, who are Roger, you've had some success in technology investing. How do I do it too? What do I invest in? And I've got this nest egg of $100,000 that I've spent 10 years earning. What do I do with this? And I really want to have a good answer, and I want there to be more opportunities. And people have seen the meteoric rise of random shit like Bitcoin and NFTs, that has no intrinsic value, and just go up 10x year over year. And you know, you're invested in like Vanguard making like 7% a year, you know, and it's like how do I find the action? Like, where's the action going to be next?
Right.
I've missed a lot of that stuff. You know, somebody told me to buy a bunch of Ethereum when it was like 10 cents a coin, you know, and I was like, you're crazy, go away. You know,
right.
We've all had big misses, you know, if you're in Silicon Valley long enough, but we're not the only ones that feel that. You know, there's people who, you know, friends of mine back in Texas who feel like they've had big misses too. So I think that area is just, I don't have anything to say about it in particular. I just made an investment actually in this space, but I think it's insanely interesting, and there's so much random alpha that's just all over the place. And with stuff like the creator economy, you know, I think there's even more and influencers and like, there's just so much like new alpha, I think, that's going to happen. And a lot of us are going to miss it. I'm an old guy. I'm going to miss it. I won't believe it's real until it's worth $1 trillion. So, you know, I think just like figuring that stuff out earlier, surfacing it, helping with personal finance, blah, blah, blah. Like, that's very interesting.
Yeah. I like that. I like that theme. I think it is one, it's an important one. And I think we've seen things emerge which seek to serve kind of the excitement of finance, but that's not always necessarily the best kind of hygienically, let's call it, in terms of like, you know, prudent kind of portfolio construction. So I think probably there's a bunch of new tools. I think figuring out how we can get them into people's hands, help people understand and assess what is risk and what are kind of opportunities. There's a whole kind of green field there to explore. So
yeah,
we'll keep thinking about it.
Buy Dogecoin.
Preach.
That's the one. That's like the one that I got into. Like, I think crypto's a joke to me, but Dogecoin's worth like, it was like 3 cents. So I bought a bunch of it because I was like, this is probably going to be worth more later.
That's amazing.
Awesome. We'll keep an eye out for interesting things.
Cool.
Well, thanks. This has been a lot of fun. Thanks for coming to hang with us.
Yeah, thanks.
Likewise.
All right. We'll catch you, Roger.
All right. See ya.
Bye-bye.